Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some data. And so this video is going to be focusing on Nio, going over the chart a little bit, but also going over the options data, which I know not everybody is interested in, whether it's the data itself or options themselves. But options are a way for bigger money to step in, influence the market and or the stock. And so I think that data is really valuable, whether interested in participating in the contract itself or, just playing the stock. And before I get into it, options are very risky. A lot of them, virtually all of them, do go to zero. So very risky to be trading. I am really just looking at them for data, although two of these contracts that I will go over I do hold, but just one contract each, very small position. So nothing big there. But yeah, I am going to go over this tweet, but like I said, I know not everybody is that interested in the contracts. So I will flip over here to the Nio chart, looking at it in TradingView, just to have a little bit cleaner of a perspective than my Webull chart, which has a lot of doodles in it, a lot of stuff going on. And so I think this is just a little bit cleaner of a way to look at it. And also, if you do follow my Saturday Crypto Corner Sat Stackers, it's basically the same kind of format with the Fibonacci retracement here and an extension that we will look at. But anyways, enough of that intro. Let's get into the chart. And one thing that really stands out to me as being very exciting about Nio, making me think that we will potentially be seeing a gamma squeeze or gamma ramp, maybe I should say ramp instead of squeeze, as they can be kind of gradual going up, is that Nio closed on Friday, so that would be August 1st. At $5.01. And by the way, happy weekend. Hopefully you guys are enjoying yourselves. And so the thing that stands out to me about $5.01 is that it's above $5. That is going to be a strike of potential importance. And so considering max pain, which is going to relate to options, we can see for Nio here that I've already searched, we can see that for the expiration, again, very important to be doing this before the week starts, we have the data up here right in this table here. For August 1st, max pain was $4.50. So not only did we close above that strike, we closed above the next strike, which is $5, closing at 501. So I think that's really good. And then what looks even better is that the max pains for the upcoming weeks, this coming Friday, August 8th, again, 450. Maybe we see price kind of pull down, attempt to pull down to that level. And maybe they market makers do achieve that in bringing price lower. But the strike after that for August 15th is $4. And I feel like it's going to be pretty tough for market makers to bring price down to that level. And so that is really what makes me think that Nio could be seeing a gamma ramp over the next couple weeks, and then maybe launching to notably higher than $4.50 come August 22nd. By the end of the month, again, $4.50, but then in September, $5. Basically where we're currently at for that max pain for September 5th. So maybe by then, the momentum starts to die down, but I do think that we could be seeing a month of, upside, but also the VIX did close above 20 on Friday, so it's possible we see, the market kind of pull back over the course of the month. Maybe Nio is a nice contrarian play, and then it does, rally while everything else is going down. But maybe not. Maybe it does tank. I have no idea. And also, since I am over here, just noting that Unusual Whales does have a summer sale going on. You can get up to 20% off options flow upgrades, or I believe you can get 15% off for, whether monthly or annual subscription. I started with monthly, but then switched to annual, and I've just been loving learning more about the options data, as I'm sure you guys can tell. But anyways, looking back over here at the chart, something that was mentioned to me on X, or maybe it was in a comment on the video on YouTube, I believe, is somebody was like, there's no way that Nio's coming back to 450 to that 382 retracement. That's the blue line here. And, it's like, okay, but, let's wait and see. And so I waited to respond. We did pull back. I believe I responded on July 30th when Nio actually closed at the low of the day at $4.51. And then on the 31st of July, we hit a low of $4.46. So piercing that 382 Fibonacci retracement, which I did get to the exact low over here on June 3rd. So going from the low of $3.35 up to the high here on July 23rd. That was at a price of $5.21. And so you can see those little points there. They do line up with that low and that high. And so that is the Fibonacci retracement that we are looking at. And so could this, go even lower? Could this break below 450? Most definitely. And just like I was talking about, oops, not the Bitcoin chart, sorry, the Nio Max Pain chart again, just like I was talking about how this coming Friday, Max Pain is again at $4.50. I do think that there will be some effort to drive it down lower towards that. And again, the following week around 4. But I don't think that we're going to be going down to 4. Part of the reason for that is we do have this 200-day moving average, the simple moving average, blue line there. That looks like it's at $4.30. And then corresponding with that is the 50% retracement, the green line at $4.28. And so if we do go lower, I do think that we will find some support right around there. So I do feel pretty good about that. And we could also go lower, though. Good to be prepared for that. The 618 is at $4.06. That would correspond with the Max Pain in a couple weeks. So always good to have a plan for the upside and the downside. But really, looking at this chart, we have this very nice move up, consolidation that to me looks like it's bullish consolidation or a bull flag. And I think that it is likely going to be going higher. And so some things that do make me think that this is a bullish move that will not only be sustained, but continued to the upside is that we do have, lower highs forming here, consolidation, as well as lower lows here, which again could be bringing us down to that 50% retracement. Again, good to be prepared for the possibility of a dip to around 428, 430, somewhere around there. But I think that could be a really nice dip buying opportunity. And then, with this, coming down with the price, both on the highs and the lows, we do have the RSI here putting in lower highs and lower lows. So there's no divergence there. So whether that's bullish or bearish, there is no divergence. So, I think that's really just fine. That's healthy. But looking at one thing that might stand out to you is the volume here. If we look back over time, maybe it's not super exceptional, but following, the downside over here, the lows from April when we had the Liberation Day, I believe it was the tariff stuff going on. The beginning of April, Nio saw lows of right around $3, 302 hit on April 8th. And so that was the low. Following that, we had some pretty elevated volume, but then volume hasn't been really too impressive until we started to move higher. Volume has really picked up. And so I do think that Nio will likely be going higher. Before I get to where I think the price could be going, I do want to point out that over here, we did hit that high on July 23rd, got rejected at a price of $5.21. I don't know if you can tell, where that cursor is. That lines up with these prior highs over here. And so it does make sense that we kind of got rejected at that level. And then if we do go back further in time, we do have this other peak here. Look at where the cursor is. It lines up perfectly with the high, or I guess I should say the open that we saw on July 23rd, which was at $5.19. And so kind of the way that I like to think about levels of significance from the past that might be acting as resistance again, like we've seen here, is rather than looking at the highs from the past. So the high on December 9th of 2024, the high was $5.36. We didn't get to that level. The high over here on March 12th was $5.49. Again, we didn't get to that level. But if we look at the chart and just kind of think about the consolidation highs, so not the wick highs, the tippy tops of those moves, but where there were multiple opportunities, or at least within the span of a day, opportunities to exit. We can see that based on the closing price on December 9th. That was at, $5.18. So I'm just going to move this up a little bit. So got that lined up right there. And we can see that did act as resistance over here. We got rejected, nearly got up to it on February 27th, hitting a high of $5.13. But we can see that there were multiple opportunities to exit before retracing, before pulling back. And so that was a really good level, in my view, to maybe trim, take some risk off the table before pulling back to, $4.50. And in my view, between $4.50 and $4, that would be, the level to be adding back in. If we do go to $4, I suspect it will be a quick wick to the downside before pulling back up and ideally maintaining, holding, closing above that 200-day moving average, which again is at $4.30. But, you guys want to know where I think it could be going to. So just doing, Fibonacci retracement, going from the low that was hit over here on June 3rd up to the high here, and then down to the low that we hit on, July 31st. And, you can just see the numbers up here, the coordinates that I chose. So that first point was the low here, 335, then 521, and then back to 446, hit on July 31st. I could adjust that, in all honesty, to the lows over here. What would that do if I did that? Let's see. I'm just going to click that. And so I could just drag it over here. That would just move the extension higher because it's taking the distance from the low here to the high here, extending it from that pullback. But I want to be a little bit conservative, so I am going to do it from the low here. And this pullback to $4.50, right around there. If I were to pull it back a little bit lower, if we do come down to 428, let's see, that would be the, 428. I'm just going to make sure, all those numbers are exact, just to be a little bit more conservative if we do see continuation of this consolidation and we do dip down to that 200-day moving average, which I think would be an excellent opportunity. Then price could be going up. The 100% move would be to about $6 or $6.14 marked there. The 1618, that's getting ahead of ourselves a little bit in my view. So I would not expect that. But, I do think that $6 seems pretty reasonable. And if you are curious how I would get to, that level, that 100%, we can just do a little doodle going from the low over here, drag that up to the top here. And so we got that nice little arrow. Then I can drag that arrow to, that 50% retracement, and that would be bringing us to around 614, that 100% extension. So that is how that works. So hopefully that's helpful for you as far as the chart goes. But really, I think that I am bullish, not because of the chart necessarily, but because of the options data. So going to dive into this post here. Hopefully you guys do enjoy this, but if not, let me know in the comments. But, I think that the options data is really, really helpful. And so this post here, I'm just going to read it and then go over the data and then go over a couple other contracts that, I am interested in. And so here I said that, the $3.50 Nio call that expires in September, so about a month and a half from now has less than 190,000 contracts open interest, as selling does continue. However, selling is negligible in my view, and that is relative to the massive buy that was placed on July 10th. So I suspect that premium hasn't topped yet, meaning that the stock price seems likely to continue higher and perhaps approaching $6 this month, kind of like I was just talking about with the chart. And so if I do click on the screenshot that I had posted here, this is what I had talked about, I believe, in the last video on Nio. This is the $3.50 call. You can see up there that expires in about 50 days, a little bit less, since it has been a couple days since I posted this. But what we can see is on July 10th, we see this massive candle, this massive spike in volume being traded, which corresponded with a candle volume of about 175,000 contracts traded. And what we can see following that is that, I could scroll in the data. I will do that in just a second. But the open interest was, actually, I can just do that right now. I got the contract open here. So if we scroll down, we can see that on July 10th, open interest was only about 10,000, but then we saw an increase of 165,000, approximately going to around 175,000 contracts open. And so we see an increase in open interest following that spike in volume, that spike in that candle there. And then following that, we did see some more volume the following days. And we have seen a lot of selling. So that open interest that we see here over the past week, open interest has been going down. It was at 192,100 contracts open on Monday on July 28th. And actually Ed's in the way, so I'm going to step out of the way there. So what you can see is 192,100 contracts open on Monday, July 28th. But then every single day last week, we have seen a decline in the open interest. And so on Friday, or opening into Friday, we saw a decrease of 1.3 thousand contracts. And open interest dropped from above 191,000 to below 190,000 contracts open. So that does seem kind of bad. But if you look at the volume of those candles, if you look at the contracts here that have been traded, or this contract that has been traded, large spike in volume, 175,000 contracts. The volume that's followed, even these big candles here, it's been negligible. So that selling, this selling over here is negligible relative to this massive buy. And so what that tells me is that whoever made this big buy, the whale there, they're just taking a little bit of risk off the table because the premium that's in yellow has gone up. It has moved up, consolidated to form a bull flag. And so that makes me think that they're just taking risk off the table. So no big deal. They are still expecting the stock price to be going higher with these in the money call contracts. They're sitting pretty safe, but they are just taking a little bit of risk off the table, when going up. So here, this is around, 50 cents in that premium, average fill 55 cents. But then that premium has gone up about 3x, to the high here. So makes sense that they take a little bit of that risk off the table, but then still holding for continued moves to the upside. But then looking at the data over here for all Nio contracts, we can see that at the time that I posted this on Friday, so on the 8th, just before 11 a.m., that would be Eastern, I believe, I did post this where net call premium was up on the day by over $1 million, while net put premium had come down by about $250,000. You can see that red line coming down here being negative, but the green line going up, representing that $1 million increase in net call premium. But if we do look at that contract, so I just had pulled up over here, $3.50 call that expires now 47 days from now. We can see that the net call premium over here, just behind me, we can see that it ended the day up $1.38 million. So that's very good. Green line going up and being sustained. So I feel good about that. But then the net put premium also being negative, down about $200,000. Did go up a little bit over here, but generally, this looks really good to see net call premium increasing by more than $1 million and net put premium decreasing by about $200,000. So I think that looks great generally for Nio. But I must say, for me personally, I get a little bit anxious when contracts get close to expiration, I like to have about 6 months between now and expiration. I just feel a little bit safer. But the thing about this contract, I feel a little bit better about it because it is in the money. So it does seem likely that, it will be closing in the money. And so I do personally have one of these contracts. I'll pull it up on my phone just so I can see what my average is. My average for my one contract is 86 cents. The low on Friday was $1.36, and perhaps more risky or of concern is that the low on, Wednesday was 106. The low on Thursday was 109. And so what I did, just to be managing my risk, I don't want to be losing money. I want to be making money, but I also want to make more money than less money. But mainly, I don't want to lose money. That's the big thing. I decided to put a stop loss at $1. Maybe it gets swept. Maybe I get pushed out of my position, but then I don't lose $86 because this contract may go to zero. Who knows? And so maybe I remove that depending on what's going on in the market on Monday. If we're gapping down and that's happening in Nio, maybe I'd remove that stop loss, or maybe I'd just let it get filled. I'm not really sure. Haven't thought that far ahead. But yeah, that's just to kind of explain what I'm doing with this contract. And part of the reason why I didn't take profits, I could have had a 2x going back in time. A 2x, I believe, would be 172. And we did hit a high on July 23rd of $1.80. So I could have made a 2x on that contract. But because I don't see this whale liquidating all of their position, they're just trimming. I am still holding. I do think that I could get, a multi-bagger more than a 2x on this one contract, risking $86, so not a big deal, but I also don't want to lose money. But the reason why I do hold this still, rather than looking at some of the other contracts that I'll go over, is because I have about 140 shares, so I don't have a huge position, but I did sell a covered call that does expire in September. With a $4.50 strike. So my average share price is around $4.38. So if it does close in the money and I am forced to sell shares at $4.50, that would suck because price is, above or right around $5. It looks like in the after hours, it came down a little bit, 3 cents relative to that close. As you can see up here, close $5.01. Yeah, I'm really not taking on any risk if the price does go up higher, or I'm not saying I am taking on risk, but if price does go up higher, if it squeezes up to 6, maybe beyond, it'd suck to sell shares at $4.50. And so that's kind of the reason why I am still holding this call, because if I am forced out of my position at $4.50, I could just exercise this call at $3.50. So I'd be forced out at $4.50 and then I'd buy back at $3.50. So I'd effectively make $100 there. So that's the reason why I haven't sold this, why I haven't taken profits, although I do want to manage that risk, so I have that stop loss at $1. But anyways, I'm taking up too much time going over this contract. One of the contracts that I previously held, but I did get out of, is the $15 call that expires in January. So 166 days between now and expiration. The reason why I decided to get out of that is because now there's less than 6 months between now and that expiration. So that gets me a little bit anxious. I tend to not make as good of decisions when I get a little bit anxious because this is an out of the money, deeply out of the money contract, $15. So the stock price needs to 3x from $5 to close in the money. Maybe it goes up to 10, but I don't know if it's going up to 15. So that got me a little bit anxious. But what we can see with this contract, if I do look at, let's say, the past 90 days, just take a big step back, we did see potentially a good amount of buying over here, maybe buying, selling over here. We'd have to scroll down to look at the data. But what we can see is that the open interest is about 47,000 contracts still open. We have seen some buying, a little bit of selling. But if we do scroll back in time, we can see that, it's, been, 40, 41, 42, somewhere around there. Back in April, let's see, where was April? Over here. We did see open interest around 37 or 38,000 at the beginning of the month, but then it did start to go up. And so now we're at 47, almost getting close to 48,000 contracts open. So that does give me some confidence that there is a lot of money behind this, betting on it going up higher, but it's out of the money. For me personally, the way that I manage my emotions, it's a little too risky. And so what I turned to is the $10 strike call that expires in June. So June 18th of 2026, so 319 days between now and expiration. And I legitimately think that Nio could be at least moving towards, but possibly hitting $10 between now and June of next year. So about a year from now is this, contract. So I own one of these, and my average is at 36 cents. I just own one contract, risking $36, not a big deal. What did we close at? We can see this last order here. The average fill was 36 cents, so that's my average. So I feel fine about that. I got about a year between now and expiration, so no big deal there. So I mean, I like this one. I could have maybe gotten a contract lower on Friday. Just thinking about that, looking at this, the average fill here, 30 cents. So I could maybe get another contract, get my average down to 33 cents. But generally, taking a step back, let's just look back past 7 days. It does look like we have seen some bigger orders on this as the price, or the premium, I should say, in yellow. Let's just bring this, actually, no, yeah. If I do this to 7 days, the yellow will be the stock price. So that does kind of mirror, what we see over here. They do look very similar. And so on, let's see, July 28th and July 29th, we do see some pretty big candles there. They're 30-minute candles over the past 7 days. And so let's look at that, the 28th and 29th, were those buys or sells of this contract. So the 28th, and we've actually seen, some pretty notable sells as premiums come down. So that's a little bit concerning, to be honest. Because like a week ago, or let's see, July 24th, I'm not sure what date that was. That would have been, so Friday of last week or 2 weeks ago, I guess, would have been July 25th. So that prior week, we had seen some increases. So we did see open interest. Yeah, let's look at this. Maybe I want to go back more than 7 days. Let's look at a bigger picture, 14 days. And so we could see, so big candle over here on the 21st. And so on the 21st, let's see, we did see a volume of almost 17,000 contracts traded. And so the open interest went from, almost 51,000 to 65,000. So that's kind of what we want to be looking at, 51,000. Is it currently lower than 51,000 after this increase of almost 15,000 contracts? And so, it's still higher. So 57,000 contracts still open. So even with this selling, that's still looking pretty good to me, because this was an increase of almost 15,000 contracts, followed by almost 3,000, followed by almost 2,000. So that represents about 18,000 contracts increase over here, whereas over here we have about 6,000 again, so that's 12,000. Let's round this up to 13,000. Relative to that 18,000, there has been a net increase. Open interest has gone up. So that looks good. I don't know what people are doing over here, because I think that this is probably going to be continuing to go higher. Maybe they're just managing risk. I don't really know. Maybe they had some stop losses with the premium coming back down to around where it was. I don't really know. But taking a step back, let's just do 30 days first so we can have the mirrored data over here. Stock price has gone up in yellow. That's a bull flag, like I've talked about, whereas the premium has also gone up on this contract, pulled back, consolidated. Bull flag, I think that it is going to be going higher. And then if we expand this out to the past 90 days, I think that we've seen some really nice dip buying opportunities getting to below 20 cents per contract, actually hitting an average fill low of 12 cents. So that's $12 per contract. I think that Nio, that this contract could be getting into the money. I think that Nio stock price could be getting to $10, maybe by the end of the year, perhaps. I think likely by June of next year. But maybe it doesn't hold. Maybe these contracts do close out of the money. So good to be prepared for that. But yeah, I mean, I do think that this contract, the $10 call that expires in June of next year, I think that looks really good. I think that the chart looks excellent. Although kind of the macro picture, what's going on with tariffs, with tensions between the US and Russia, I think that we could be seeing a pullback in the markets, but maybe Nio, maybe Chinese stocks are a good way to kind of play the contrary to that and take advantage of to the upside. And I do think that Nio could be testing $6 in the next couple months. So we will have to see. And I definitely think that Nio is likely to be closing in the money for that contract that I went over here, the $3.50 call that does expire in September, about 50 days from now. So we will have to see about that. But yeah, anyways, this is kind of a long video. Hopefully it is helpful for you guys. I do appreciate all the views that the Nio videos have been getting lately. Hopefully helpful for you. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this, and follow me over on X to get some more great content like this. Thanks a lot, you guys. Have a great rest of your weekend, and hopefully Monday starts off strong for you guys. Take care, you guys.